Welcome to The Real Money Show, the number 18778 Silver, and the website guildhallwealth.com. Thank you so much for joining us, and hopefully you've been enjoying the bull market in gold and silver. We want to get you some updates on what's been happening in the markets and give some context to what may be happening in the markets. But if you're looking to hold physical gold or physical silver in a registered account, you want to use this number and check out our website, guildhallwealth.com, 18778 Silver. We also offer direct delivery of physical gold and silver. If you're looking to start for the first time, you might want to start with, a gold bar, tuba maples, start small, crawl, walk, run. It's the best way to understand pricing, the best way to understand that this is an actual asset. This isn't just some numbers on a screen. And this is the best way to protect wealth and grow your wealth going forward into the future, as we believe gold and silver are revaluing at this point in time. Holding physical gold and silver is the best way to go. So you can call us, again, 18778 Silver, and we can show you how to hold physical gold and silver, to just buy it direct, take it home, or even store it in a vault for ease of liquidity. Not everybody wants to store a lot of product at home, and some people do want to make sure that it is secure, it is insured, but when the time comes that they can sell it, get liquidity right away. I want to welcome to the show Jerry Correia. I'm Jeremy Wiseman. Let's kick it off.
What's going on, everyone?
What a week, by the way. We had a couple of weeks ago, we had our first $100 up day in gold, and the X sphere was very excited. And I hope you remember that I said, oh, that's amazing. We could also have our first $100 down day.
You did. You called it.
So let's start with that. We've had a great run in the gold market. Huge up days. I wish I knew the numbers, but how long it took, I think I have it here, how long it took to go up the first 1,000, how long it took to go up the second 1,000, how long it took to go up the third 1,000.
Right.
And you're seeing the trajectory here. How concerned were you when you saw a little bit of a pullback this week?
I mean, everyone knew that it was going up at $100 a day. This was consecutive movements. We have to expect a pullback of some sort, and the pullback did allow the silver to gold ratio tighten. It went to extreme level at 105 to 1, and then the gold price pulled back. We hit 3,500 very briefly, 35 and 5 cents. The world blinked, and then shrugged, a spike and then a pullback. Is this business as usual? Not really. This is not just your ordinary gold rally. It was definitely one that gave us some clarity in the market.
In what way?
Because we saw the pullback. It was a one count, Jeremy. It was another one count because the very next day, the prices rebounded. As we see this today, as we're recording on Thursday, the pullback happened on the Wednesday. And what was the cause of it? We know that central banks were not selling.
Right.
Physical wasn't selling. They didn't flinch. They didn't sell. They continue to buy, and they're preparing to buy more and more, just like they've done for the last few record-breaking volumes. The demand is higher. The World Gold Council shows this. The World Silver Survey shows this. It's not just for returns. This is not your normal pullback. This is for resilience and sovereignty, what we're seeing happening right now. The shoring up of physical gold on banks' balance sheets, on pension balance sheets globally, insurance companies' balance sheets.
At least in China.
It's a signal. It's a signal to the rest of the world what the solution is. And if you have too much debt on the one side, too many unfunded liabilities, you have a problem, but you got a solution.
Yeah, this is a very interesting part of it, because a lot of the narrative about the gold's recent rise is about not having an answer to a lot of these geopolitical questions. And so let's run to the safe haven of gold because we don't know what the answers are. And this kind of freaking out is pushed people into the metals because there's a lack of understanding or a lack of answers. And so the answer is just go to gold. Although the answer is gold, which is the irony of it. Right? There's a reason why central banks are buying it. There's a reason why people are looking towards it right now. But the retail market, surprisingly, is still not quite there. I mean, there's people buying it in registered accounts for sure. You know, a little bit of people getting into the market, but we're not even looking at the way it was. One thing I recognize, I guess, you know, let's jump in on this. You know, in 2020, when people were, you know, needed their toilet paper.
Oh, yeah.
Gold was flying off the shelves. Flying off the shelves. You had people booking orders 3 months out, right? Not with Guildhall, but with other companies. They were booking 3 months out. Because once you run out of the supply that you have, you're ordering it from a wholesaler, and then there's 90 days, you know, a month delivery, whatever. They'll only let you buy out a certain amount of time, and then they cut it off. But literally, they were buying out 3 months ahead. We're not seeing that. We're not seeing that in the market.
Not at all.
So for the retail market, I would say this is a stealth bull market. There's people getting involved, don't get me wrong, but it is not like that. And we've seen that before, both during 2020. We saw it during the silver squeeze, 2021, I believe that was, and even during when, a little bit during the Freedom Convoy, but also I think it was when with the Russian incursion into Ukraine, we saw it. It was basically you could not get it. It was not available, but that hasn't happened yet.
Yeah.
And the prices are way higher than they were back then.
Yeah.
What are your thoughts on that?
I'm seeing huge. Actually, there was a statistic that came out this week about Western demand coming into precious metals.
Okay.
But as we always see, the proxy comes into place because when someone comes to their financial planner or their banker and they ask for gold, they're not going to be offered the real thing like your central bank does. They buy the real thing. They slip in a thing called the ETF, or they slip in a thing called the paper derivative. What it is? It's a representation.
Gold back fund, pool account, ETFs, you name it.
But what have we learned in the last week or 2 weeks? The world is realizing cheap isn't real. The cheap stuff is going to get you in trouble. The cheap stuff can blow up eventually. From knockoff purses, even the stuff that's being we talked about on the show last week. You know, the stuff that, you know, Louis Vuitton being made in China overseas. It's not, you know, you start watering things down really quickly. You're watering your portfolio down. So my message is to go for the gold, go for the real, because you want to build a lasting reserve for your future. This is, you know, these are the time-tested ways that society and countries over millennia have done. So you have to acquire the real thing. That would be my message, to not stoop for the proxy. Go for the ounces, not the paper.
The number 18778-SILVER, the website guildhallwealth.com. That's for you to go for the ounces. Get physical gold and silver in your portfolio. Store it in a vault for ease of liquidity and make sure it's secure and insured, or have it in a registered account like an RSP, TFSA, or Lira, LIF, RIF, fully allocated, fully segregated. You know, Jerry, I've been really getting into some Canadian history over the last few weeks.
I think we all have.
And just kind of this feeling and understanding of what is meant by globalism, and that globalism has fed into this financialization of things where you're not really producing things of value, right? And, you know, I think you said a couple weeks ago how much of the S&P is actually real things. And we're moving back into a world of real things, which reminds me that that's something Putin said several months ago as well. Do you remember that quote?
I do.
What was he saying?
I don't remember the exact quote, but
Okay.
I remember that along the line. This is the shift.
Yeah.
The shift of, you know, getting the vernacular of getting back to something, getting back to a real economy versus financialization.
And you know, you're seeing all of these things happen. What I have noticed is people are getting very uncomfortable. You know, people that we follow, people like Peter Schiff, George Gammon, they're very uncomfortable right now.
Oh, yeah.
Their critique of the Trump administration is off the charts because they can't pin down what's going on.
Oh, they don't see it. I don't understand why they can't see it.
What do you think that is?
Well, obviously this week we heard of tariff cuts and then now no cuts, and then Fed tension, fire this loser is what he said, and you have the likes of Yahoo Finance coming out saying Fed independence fears drive investors away from U.S. assets, and in that article, one of the a foreign exchange trader, Helen Given, she wrote, Trump's musings on the potential for firing Fed Chair Powell, even such thoughts don't come to fruition, do in the minds of the international community constitute a substantial threat to the independence of the U.S. central bank and by extension the status of the U.S. dollar as a safe haven currency. What is your thought on that?
Oh my gosh.
We need U.S. Federal Reserve independence, like they were independent to begin with.
Let's translate that in the next segment. And also, let's talk about the World Economic Forum. The king is dead. Long live the king. He's already being investigated for ethics and blah, 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 and money laundering. And guess which country has been sending money to the World Economic Forum? Stick with us. The number 18778-SILVER. The website, guildhallwealth.com. Learn how to hold physical gold and silver in a registered account. Hold it directly if you'd like. Just purchase it direct. You can buy it, take it home. That's a great way to go. There's also the depository where you have ease of liquidity. And also, if you're looking for real value in the market and you're looking for something that you can easily travel with, there's also natural fancy colored diamonds, which we'll get into a little bit later. 18778-SILVER, the website, guildhallwealth.com. You know, I think sometimes the problem with physical gold and silver is it's just amazingly too simple, that people want to make it more complicated. I've also, Jerry, been having conversations with people who are really concerned about costs. You know, what's it cost to do this? What's it cost to do that? And, you know, I find myself laughing a little bit because I get it. Everyone's price conscious. But if you bought gold 10 years ago, trust me, you don't care about the price.
Oh, you do.
You don't care about what things cost.
You're like,
right?
I should have bought more.
I should have bought more, exactly. Also, I was thinking, and I said to you the other day, I said, you know, being in this business for over 16 years, I have never come across anybody, I'm racking my brain, who has ever said, I hate that I bought gold, or I can't believe I bought gold, or just any distaste of the fact that they bought gold. Silver, hey, listen, it's a volatile metal. You know, you got to have thick skin and strong fingernails. Mm-hmm. Okay? You definitely do.
Yeah, we saw what happened to the Hunt brothers.
There's money that can be made. But in gold, I've never had anyone say, no, I wish I never bought that. It's always people are happy at the end of the day.
Yeah, you asked me
I just wanted to put that out there. I just wanted to put that out there. You asked me that.
I had to actually think. I'm like, no. In my entire, I started in 2013. No, not once.
It is tough to regret it. And even when you see, yes, I get it, the prices are higher, but we have to keep it in context of what is the value of that. How many ounces of gold are you able to, what can you purchase with those ounces of gold is the question. Everything is going to get more and more expensive. And before we get back to the Federal Reserve, Jerry, you know, we're talking about globalism, and we've got something else we want to talk about to bring into that perspective. You know, we started off the year pretty positive, and seeing the run in the market has also been very positive. And we said, as our listeners know, this is like a new bull market. It's like we're starting fresh from here in a way, because we're moving into a different world where they're trying to move to multipolar world, mercantilism. This is why central banks are buying, etc., revaluing gold. These are all really, really positive things. And so I was very positive. Mm-hmm. And in the last segment, I said, you know, I've been doing some history diving, and I'm kind of back on the train of, man, this thing is going to blow up.
Yeah.
I think it's being accelerated, but we are sitting on a massive debt bomb, and the financial system has to change in a big, big way. A part of the financial system that maybe this is what the globalists meant all along, is to bring us to a place where it would be destroyed, and then they'd say what the Federal Reserve always says, or what the banking powers always say, oh my gosh, we have a crisis. You have to give us more power. over you plebs.
We have the solution.
We have more solutions. We just need more money from you and to tax you more and do
Over
bank bail-ins and blah, blah,
and
blah.
over again.
All right, so let's get back to the Fed here. Put in place by Congress. Not independent. They depend on Congress. Depends how you want to use the word independence. But they are independent in so much as they are a banking cartel. Okay. But you are put in place by Congress, which means you can be taken out by Congress. Click your heels 3 times, and the Fed can be abolished.
Yep.
Okay? Now, that might seem like we're a far way off from just a snap of the finger and abolish the Fed, but it's true. The president can't fire the head of the Federal Reserve. But what he can do is put in front and center, letting people know who they are, what they do, are they good for America, are they good for Americans. Before there was a Federal Reserve, no one paid income taxes. After the Federal Reserve, they all started paying income taxes. Have they been good for the economy or not good for the economy? Trump pointing out that the head of the Federal Reserve is always, 2 steps behind and too short in making a move. No one else hasn't already said, or something we haven't said on the show 100 times, or even people on CNBC have said 100 times. But the fact is the Federal Reserve is not something that has to last forever, and they're not independent. And I see you, Jerry, wanting to jump in on this. Go ahead.
Well, this is why I'm here, Jeremy. This is my passion. Understanding the weapon of their warfare is currency. That is the most powerful weapon one can yield or a country can yield. They will not let that go, which is the reason why we've seen presidents in the past who succeeded also killed for this task of taking control of the currency, bringing communism out of the equation, give power back to the republic. And we're seeing the same cheerleaders today cheering on the Federal Reserve today from the corporate media, driving fears and talking about foreign treasury sell-off is accelerating as these tensions arise, threats to the Federal Reserve independence.
But these are the type of things, by the way, Jerry, these are the type of people making criticisms. Like, I remember right when the Trump administration came in, as an example, you had people in the gold industry saying, oh, this Doge thing is BS, and it's just going to be another department that's going to spend a bunch of money and do nothing. Right? Well, they're not coming around and saying, yeah, I made that criticism. I was wrong. They never say that. They never come around and say, yeah, okay, it's doing its job. But what is the point of that? I feel like the big point of it is not just to make the cuts. The point of it is to say we're going to start from the outer circle, which is low-hanging fruit, and show you guys where fraud and waste appears. And as you get...
you've been subsidizing.
And as you get acclimatized to what you're seeing in terms of fraud, in terms of waste, in terms of spending and all of these things to things that you shouldn't be spending on, you're gonna be ready and thirsty for more. And we're going to keep going. Well, what happens when they get to the Pentagon? Are they going to end up finding, here's my question, are they going to end up finding the gold that was taken out of Ukraine, the gold that was taken out of Iraq, the gold that was taken out of Libya? Are they going to find it? Are they going to end up saying, we ended up with, we've got 20,000 tons of gold, not just 8. What do you think?
I think it's possible.
They go, oh, hey, look.
Probable.
Like Jason Bourne. Look, we found a black briar at the Pentagon. And, oh, by the way, they've had this gold since like 1920. Well, running these black ops. Yeah. Like, how far away are you? I know we're jumping down the conspiracy road, but how far away from you are you from, well, here's some waste in U.S. aid to, oh my gosh, look how much gold has been lying at the Pentagon for the CIA to, do these.
Well,
it's a thought. It's a thought.
Well, the thought, I think it bears fruit because we're seeing chaos and panic because we're following the money. It's revealing more and more. The Pope's dead. We know that the independence of the Vatican Bank was in question for a long time. There was even question about the gold that was there, where is that? These are all, I think, valid questions. He who has the gold makes the rules was quoted this week. Very interesting. I think this was a staple to what we're seeing. This is the foundation, and everything else is surrounding and rotating around that statement. And
that was huge. I mean, I think that pushed the price of gold up $200.
And just to set the record straight regarding the language of the law and the Federal Reserve's independence, there is a law that pertains specifically to the removal of Fed board members, and it can be found in Section 10 of the Federal Reserve Act. The law states that each member of the board shall hold office 14 years unless sooner removed for cause by the president. The president has that authority to do that, which they also have the authority for impoundment, which is clawing back all of that wasteful spending that has been done on the back of its citizens.
You know, it's such a classic move, right? Put something out there, let everyone feast on it and freak out on it.
Watch the freak out.
And then
I love it.
And then to find out, oh yeah, he can do it. Right? And so then everyone who's being negative about it has to retract. Who knew? Who knew? Do I have to retract? Did I say he can't do that? I think I have to retract.
I think you should.
I retract.
Okay, that's good. We got to be honest here.
You got to be willing to say I was wrong.
I mean, you know what? We enjoy this show. You know, we are enjoying this. We are seeing the trajectory. We see the trends.
Are you saying a double entendre when you say enjoying the show?
We are enjoying the show. Because why? Despite the chaos and the up and down of the market, we have insulated ourselves by allocating towards physical precious metals, which is outside of all currencies that have been printed, that have lost over 90+% of your purchasing power on the back of your kids' future payments, unfunded liabilities, outside of toxic derivatives that are about to implode.
It does feel like assets are starting to make their way down the Exter's pyramid to gold.
Yeah.
It does feel like there's this kind of trickling effect down the pyramid at this point. It is funny. You do have to pinch yourself in some ways that we are at the very beginning. You know, you have to say, whoa, the market really moved up. And as a broker, you know, you get used to seeing certain prices and working within that. And you can't help it. You get so acclimatized to seeing, you know, $3,200. And then all of a sudden it's $3,500 or $3,400. And you have to quickly make those changes. And new people are coming into the market, et cetera. And it's the same old, same old. What does this cost? What does that cost? You know, pricing and whatnot. Can I get it, quote unquote, cheaper? But at the end of the day, you realize, $3,500 is still quite low when you think about gold compared to the debts, gold compared to unfunded liability, and how having the asset side of the balance sheet increase. You could see gold easily go to 7,000 before you have to rejig it. By the way, we haven't even talked that Goldman Sachs joined in calling for $4,000 gold. Right?
That they did. Not just, there's a plethora of other major banks that have done this. You have just recently, it was, I have it on my desk somewhere.
Or was it
Deutsche Bank?
And
Deutsche
JP,
Bank.
Which one? Sorry, was it JP Morgan this week that said
Yeah.
4,000? Sorry,
JP says
Goldman
yes to
Sachs already said yes.
Yes.
And then now JP Morgan
Yes
saying
to the
yes.
dress.
Yes.
JPM says 4,000 gold. Deutsche Bank triples down on gold. Even talked about the correction. It's going to be very, very brief, and that physical buying continues unabated, and it will continue to rise. So the positioning is higher. I think they're still lowballing their forecasts, and they will likely have to revise higher as they always do. But they're all on one side. And just to conclude, back to the Federal Reserve, if I may,
Of course.
we just have to remember that this is the focus. Is the source of all of the inflation and the devaluation of your currency. The source is central banks. The fifth plank of the Communist Manifesto is your central bank. And just to remind our listeners, just last month, you probably never heard of it, but just last month, March, it was Senator Mike Lee and Rep. Massey introduced the bill to end the Fed. They said the Federal Reserve has not only failed to achieve its mandate, it has become an economic manipulator, directly contributing to the financial instability many Americans face today. We need to protect our economic future. end the monetization of federal debt that fuels unchecked federal spending, and put American money on solid ground. We need to end the Fed. And Massey said Americans have suffered under crippling inflation, and the Federal Reserve is to blame. During COVID, the Federal Reserve created trillions of dollars out of thin air and loaned it to the Treasury Department to enable unprecedented deficit spending. By monetizing the debt, the Federal Reserve devalued the dollar and enabled free money policies that caused high inflation. And this is not just that wasn't just the US. The Canadian dollar back in 2012 and 2020 for COVID relief, the Bank of Canada printed over 4 times the size of our economy, which is already pretty small. To print that much currency, the loonie is in the crosshairs.
The number 18778-SILVER, the website guildhallwealth.com. If you're looking for shelter from this economic storm, you want some physical gold and physical silver. You can buy it direct. You can store it in a vault for ease of liquidity and make sure that it's fully secured and insured, or you can have it in your registered account like a Lira, LIF, and RIF. In the next segment, we're going to talk about World Economic Forum, UBS, some colored diamonds, and Scott Bessent on the IMF. The number 18778-SILVER and the website guildhallwealth.com. You know, Jerry, the world is in upheaval. You were mentioning these senators who are looking to end the Fed, and I find it interesting. I'm seeing so many people wanting to protect certain things, like protecting the Fed, protect its independence, protect. But you just kind of go, do you know what you're protecting? You know, it was like, I remember, again, I don't mean to push this to be so critical of Peter Schiff this week, but, you know, he was like, oh, you know, you're going to fire all these government workers and put all these people out of jobs. And it's like, do we, not we, but do they not have a moral imperative to get rid of fraud and waste?
A fiduciary
and if you have
responsibility.
someone sitting at home who's not doing a job and can't tell you what they're doing for their job, shouldn't they be fired? And that money that's being spent by American people should be maybe going towards something else, right? And by the way, since we're on that, I hate when a politician says, we're not spending money, it's an investment. Bro,
I know.
that is not an investment.
That's not.
You are spending money.
Yeah.
You know.
If you were an owner of a company and you saw your employee, a lackey, just sitting there doing nothing, you would fire him. That's the free market. I think that's part of the role of an owner of a company. And in the same way, you know, the president and its administration is treating this like a company.
And I see these people. They're trying to make the, you know, square peg fit a round hole. They're like, well, GDP is up. You're like, do you understand how manipulated these numbers are? You know, like if the government hires a third of the population, guess what? A third of the population are going to have jobs all of a sudden, right? Well, where is the money coming from? The government doesn't produce widgets.
Nope.
So eventually that's going to come. It's going to come clear.
Mm-hmm.
What I find interesting is when they start to believe their own numbers that they're creating, right? That's when things get pretty weird.
Yeah.
Let's talk about UBS.
So UBS gave a report this week. They're predicting a 25% surge in silver. This is definitely the time to invest, is what they're saying. Amid growing geopolitical uncertainty, evolving trade policies, UBS is now urging investors to take a closer look at silver, and so are we. And the timing couldn't be more compelling. UBS analysts project silver prices to climb from $30.25 up to $38 per ounce by late this year, representing a potential gain of 25.7%. There are some market dips. The bank's outlook still remains bullish, citing silver's strong industrial demand, robust technical indicators, and historical resilience during past trade wars. The key takeaway from their strategy: this volatility in the markets creating an opportunity. It does very well. We see the VIX spiking, so does silver. Silver prices tend to swing wider than gold. You have to buckle up, understand why. It's a smaller market, a lot less above ground ounces in silver than gold. Industrial strength. We always talk about that. The World Silver Survey came out with no mention of the military, but we know military demand is massive. Plus solar, electronics, healthcare, AI, you name it. and plus rate cuts. There is an argument for further rate cuts causing dollars to drop and silver will pop. So this is a great report, and I respect them for giving their investors the information that they need.
And I think when you look at the gold-silver ratio, it's like over 100 to 1 right now. I think if you start to plug in some of those numbers, it would back up what they're saying. You could easily be seeing silver into the low 40s right now. So I think $40 is the new 30 this year, and let's take it from there. Let's talk about Scott Bessent and the IMF.
Scott Bessent this week gave his keynote speech on the IMF, and the best takeaway line was make the IMF again. In the final months, he started off by saying, in the final months of World War II, Western leaders convened the greatest economic minds of their generation. What was their task? To build a new financial system. At a quiet resort high in the mountaintops of New Hampshire, they laid the foundation for Pax Americana. The architects of Bretton Woods recognized that a global economy required global coordination. That's globalism, the birth of globalism right there. To encourage that coordination, they created the IMF and the World Bank. Basically, in short, was to restore and preserve balance. And he said his goal in his speech today, or that day, was to outline a blueprint to restore equilibrium to the global financial system and the institutions designed to uphold it.
Yeah, don't forget that those institutions were infiltrated, right? When you've listened to Klaus Schwab talk, and he says, it's private, it's public, corporate, and private partnerships, right? Which is fascism. Mm-hmm. And then he boasts about getting his members into government and all these places and whatnot. And, people were probably becoming members that didn't know what they were joining, right? What they were paying a membership to. They were just like, oh, Davos, that sounds great. Like, how do I get involved? I want to wear a parka and be interviewed on Bloomberg, And you just get to, we're gonna vax the world, and make money doing it. Okay, what are we paying attention to here? And then the government of Canada then ends up through its international affairs, probably sending money to the World Economic Forum, and Klaus has had to step down because, of course, now he's in trouble for ethics and probably laundering money, kind of like
how many corporations were involved,
and we're sending him the money.
Yep. We've
been sending him the money. So we'll see how that plays out. And then, of course, the guy they bring in is even worse. He's even more of a technocrat, even more of the world is on fire and it's all your fault, right? He's like, you're drinking too much water, the former CEO right. of Nestle. Like, this is absolute ludicrous. Why have they gone so far that Bessent? Now, the question here is, I know we got to go to break here. Why is it that Bessent stuff sounds so radical? It's not radical. It makes perfect sense.
That's right. His goal was ultimately what you mentioned, to reconnect the IMF and the World Bank with their founding missions. They were knocked off. He calls it mission creep, and has knocked these institutions off course. We must enact key reforms to ensure the Bretton Woods institutions are serving their stakeholders, not the other way around. America first does not mean America alone. To the contrary, he says, it is a call for a deeper collaboration and mutual respect among trade partners. America first seeks to expand U.S. leadership in international institutions like the IMF and World Bank. They're stepping up. By embracing a stronger leadership role, America first seeks to restore fairness to the international economic system. The status quo of large and persistent imbalances is not sustainable. It is not sustainable for the United States, and ultimately is not sustainable for other economies. And he goes, now I know sustainability is a popular term around here, but I'm not talking about climate change or carbon footprints. I'm talking about economic and financial sustainability, the kind of sustainability that raises standards of living and keeps markets afloat. International financial institutions must be singularly focused upon holding this kind of sustainability. And it goes on and on.
And you know what? Let me give you a gold and silver context to that. What that means is that these technocrats don't get to just borrow money off of the tax base of populations and just spend and debt into the future. that's being cut off as well, because that's not sustainable. Having a credit card and just spending without having any money coming in is not a sustainable economic system. Gold helps remedy that, because they're basically saying, if you have gold, you can make the rules. You can say, look, you don't have the cash. You want to borrow against gold? Have at it. That's where the Basel III rules come into play. But if you don't have gold, what are you borrowing against? What do you have to come up with? Are you just making up the cash? Are you just stealing it from tax bases? You don't get to do that anymore, because that's actually not sustainable. That's making everything worse.
Yes.
And that's why we could be headed towards a massive bubble collapse at this point. So maybe that's why this is revolutionary. The number 18778 silver, the website guildhallwealth.com. Holding physical gold and silver is a necessity right now. It's a must, not just to protect your wealth, but also to take advantage of the revaluation that's clearly happening around the world. Gold's coming into America. It's being moved into stronger and stronger hands. Central banks are buying it because they know that gold is so undervalued, and as it revalues, the asset side of the balance sheet is going to look quite pretty against the debts that are going to start to look smaller and smaller by comparison. Let's unleash that economic engine, baby, but let's do it with some physical gold and protect that wealth. It's a critical time, really, and silver is a critical metal. It's time to think about holding something real, something that has true value. And if you think the prices are high, give us a call. Let's have a conversation, show you where we think that there's true value at this point in time and why gold is still undervalued versus fair value or overvalue. You know, looking back in history, Jerry, there were a couple of brothers who saw the value of silver. I'll kind of tee this up for you. They were involved in oil in Libya, the Hunt brothers, and Gaddafi nationalized, and they were kicked out of their oil investments. They started to look around. At the time, gold was still illegal to hold in the United States. By the way, I did hear that very few people actually turned over their gold. It was something like only 1/3 participated. 2/3 of the people kept their gold.
Right.
Something to keep in mind when people are really scared about confiscation. But nonetheless, they turned to silver. They said, okay, that's legal. Wow, look at the story. They just, at that point, Lyndon Johnson had just removed it because there wasn't enough silver for the
military,
for the coins, for military, etc. And they said, oh, let's buy that.
Yeah, exactly. I want to bring to the table a story called "The Lessons in Paper Gold Derivatives or Proxies." The hunts were simply hunted. And I just want to loop in when I mentioned earlier, you may be interested in gold. You may be interested in silver. Don't get duped in buying the proxy. Buy the real thing. There was a trader that was most commonly credited with convincing the Hunt brothers to start buying silver futures on margin rather than just the physical silver that they were accumulating. And they were probably associated with the firm Conti Commodity Services, which is a subsidiary of Continental Grain. Anyways, the Hunt brothers originally began accumulating massive amounts of physical silver in the early 70s.
Yes.
Partly out of distrust for fiat currencies, and they stored it securely in Switzerland. Now, some sources mention that Paul Volcker, as Fed chair, and CFTC regulators being involved later in efforts to curb the Hunt's influence over the silver market. But there was a person who pushed them into the futures market, likely in 1979, just before the peak.
I think it was a bit earlier, actually. I think they started getting into futures like in 77.
I thought it was 77.
But at the same time, I think you're right, though. It was probably a bit later. The point was they were doing physical, and then they decided we're going to do margin, but they didn't have the liquidity. They were billionaires. They had houses and things, but they didn't have the cash.
Exactly. The move to futures contracts allowed them, to get greedy and control a massive portion of the market on margin, which ultimately contributed to the blow-up in early 1980. This plant, most directly associated with facilitating the Hunt brothers' transition from purchasing physical silver to trading silver futures on margin, was Norton Waltuck. He was a former floor broker and vice president at Conti Commodity Services. These brokers were instrumental, Jeremy, in enabling the Hunt brothers to get greedy with paper to leverage their positions in the silver market, contributing to this dramatic rise and leading to the market collapse in 1980 and thus their demise.
And in other words, to bring back the percent conversation, had they stuck with physical outright, owned and held in a vault, that would have been a much more sustainable investment for them than when they decided to start using leverage or paper or getting financialized, right?
Yes.
And that took control away from them and put it into the control of the banks. Who's the famous guy in our Mr. Gold? He just passed away recently.
Jim Sinclair.
Jim Sinclair. He helped them unwind their positions, right?
No legend.
It's very interesting. It's a very interesting thing.
And I think, the financialization that we're seeing globally, I think one of the largest financialized markets is silver. We look at that ratio, 400 paper derivatives to every 1 ounce of silver. 400 of those paper contracts for every 1 ounce of silver. That shows us how important and how much they need you listening out there away from the physical. But don't fall for it. Fall in love with silver as we do, because silver will love you and your family back. It's going to do its job. I forecast silver to head into the hundreds through triple digit. I do see gold going into $14,000 territory following the third wave cycle. So you want to be on board and you want to give us a call, 1-8778-SILVER, or the website guildhallwealth.com.
Jerry,
your closing sentiments.
I think we've said it all.
I think so.
And anyone who's missed a show can catch us on YouTube. Follow us on X. There's a lot of good stuff on X this week. It's been a very interesting week, so just check it out. Also, sign up for our newsletter. Give us a call, and we put out the articles that we've been talking on the show. We'll get that out through the newsletter. Again, if you've missed a show, catch us on YouTube, catch us on Rumble, catch us on Spotify. Thank you so much for joining us on The Real Money Show, and we can't wait to speak to you next week. You've been listening to 640 Toronto.